In addition to the report, what we will cover this morning is why we do it and why we feel it's important. We will then provide a sector and sub-market review of the office market, followed by the industrial market. Within each, we will look at what we learnt over the last 12 months and what opportunities there are going forward. Importantly, we have not looked at the retail sector within this report, as the issues and opportunities are at a national level, owing to the retail market being dominated by companies out of Birmingham and out of London. It's therefore quite hard to capture this data, so this report has been prepared to assess the local office and industrial occupier market. Finally, we'll look at what the findings of this report mean for 2022 before taking your questions at the end. So why do we do this report? This report has been prepared using unbiased market data from the Worcestershire Local Enterprise Partnership, which provides historic deal information and real-time availability figures, all of which have been presented in a way which we hope helps make informed decisions. The report looks into the office and industrial sectors of each submarket and allows us to provide comparisons to the past and identify opportunities for the future. One purpose of the report is to aid business growth by identifying the needs of the business community and providing the right product for each market. Finally, the report uses actual data to assess the health of each submarket, particularly in response to the COVID pandemic. Instead of speculating on how the county and commercial property market has performed and reacted to the impacts of the pandemic, we're able to see what the shift in trends are and how occupiers perceive being located in Worcestershire. So, looking into the performance of the commercial property market in 2021, we'll start with the office sector. Contrary to what we all might think, 2021 was a good year for offices within the county, with take-up up from 155,000 in 2020 to just over 160,000 in 2021. Interestingly, before the pandemic in 2019, take-up was also at 155,000. So this shows recovery in 2021. There was an increase in all submarkets except for the Malvern Hills and Wyre Forest, although it is worth pointing out that these two districts are the smallest office submarkets and therefore are relatively volatile to whether there's a large transaction or not. We'll now look into the key office submarkets of Worcester, Bromsgrove and Wychavon, followed by a summary of the Malvern Hills, Redditch and Wyre Forest. So, starting with Worcester, there were 23 office transactions in 2021, with all but 2 of these being lettings. Looking at some of the key stats which we've got on the screen, take-up was actually at its lowest pre-pandemic in 2019, with take-up in both 2020 and 2021 outperforming 2016, 17 and 19. This shows a resilience of the Worcester office market to the pandemic and the consistency and confidence people are placing in being located in Worcester. Other metrics which we look at are the average deal size. As a result of the pandemic, there's been lots of speculation about companies downsizing. In Worcester, this wasn't the case, as the average deal size has increased from its lowest point pre-pandemic in 2019. Similar to this, on the right, the percentage of transactions below 1,500 square feet, which we class as space that's suitable for SME businesses, has decreased since 2019 and has actually fallen below 2018 levels, a year which was a really strong year for the Worcester office market. Now, for those with a super memory, back to 2 years ago, this slide was taken from our previous presentation. What we said back then is there's a geographical shift in the Worcester office market, with occupiers wanting to be located out on the business parks and out near the motorway junctions where we are today. We then went on to say that by repurposing the upper parts of retail accommodation, we could attract occupiers back to the city centre and bring suites back into town, which will only improve the high street. What we've actually found as a result of the pandemic, that it's helped us force this issue anyway, with more occupiers looking to take space in the last 12 months within the city rather than out of it. On the screen is a map which plots all transactions within Worcester in 2021. As you can see, only a handful were outside of the city centre. We believe that this trend has occurred as a result of employers wanting to create an environment which attracts talent and brings teams back together. By being located in the city centre, there is a difference to the Home Office in that amenities are close by. Employees can go shopping and do their banking at lunchtimes or go to a restaurant and grab a drink after work, something which is hard to replicate in the Home Office or even in an out-of-town office. A scheme which has demonstrated this theory and this requirement of being located centrally within Worcester in quality space is the successful lettings of office space at the Royal Porcelain Works in Worcester. We bought this site to the market in June 2020, which many would think for the office market wasn't a good time. However, in the 18 months since, we've let all 6 of these suites between 460 and 1,000 square feet. We have a larger 2,000 square or 3,000 square feet to the front of the building, which is currently under offer. It's not space with parking. It is in the middle of town, but actually it's been really popular. As people have said, "Do you know what, we want to get back into the city centre. We want quality space. We've got to create," the image on the right shows an internal shot of the space. We've got to create something that people want to come to work to. Looking at Bromsgrove and the Bromsgrove office market, take-up doubled from 2020 to 2021. Critically, take-up in 2021 outperformed pre-pandemic levels both by the amount of square feet transacted and the number of transactions. We've consistently reported how Bromsgrove is a popular location within the SME market. And again, I'm reusing my material again because this table on the right was in our 2018 presentation, where we just showed the makeup of businesses as provided by the County Council within Worcestershire. This table shows us what we're saying, in that Bromsgrove has a strong SME market. And when comparing this to office take-up in 2021 by unit size, it's no surprise that we're seeing here 83% of transactions in the 0 to 1,500 and 1,500 to 2,500 square foot market, showing demand from SMEs. This also isn't just a pandemic trend, because this here is the same chart but over the past 5 years. So hopefully ironing out inconsistencies with the pandemic. And again, 79% in these two categories, showing the strength of that SME market. A real example of where small office suites have been popular is the Courtyard office scheme in Bunsford Hill. On the screen is an aerial photograph of the development with information on 3 transactions that happened last year, all around 1,500 square feet or below. Of these transactions, we've achieved around £11.50 to £10.75. Perhaps not where we were before the pandemic, but it is important to notice that these transactions were just parts of buildings, which may lead to a bit of discount and may just show a bit of recovery that's needed within this sector. Where rents and capital values have typically been stronger in Bromsgrove is Topaz Business Park, which is on the left here, which lies adjacent to Junction 1 of the M42, and the Green Box development in Stoke Prior. We've already seen headline rents bounce back to £18.70 per square foot at Topaz, with the March 2021 letting to Vigo Communications achieving this. Likewise, capital values have returned to £200 per square foot at office space in Greenbox, a scheme which has typically attracted the highest capital values per square foot in the county. You'll see in the report there is, however, a lot of availability within Bromsgrove, and we are seeing this space being taken up. So as this starts to happen, we expect this to continue to having this positive effect on rents and capital values, and we expect to see an increase in 2022. Looking at Wychavon, take-up in Wychavon, as shown in the chart on the left, remained consistent in comparison to recent years, and it was the closest submarket to its 10-year average. Out of the 18 transactions that happened in 2021 in Wychavon, 16 of these were lettings within the sub 2,500 square foot market, showing this demand in Wychavon from the SME market. The chart on the right shows headline and average rents, with Wychavon being the only submarket in 2021 to see headline and average rental growth. So despite take-up and rental performance being good, there was a lack of freehold transactions in 2021. But in fact, there's been a lack of freehold transactions in Wychavon over the past 5 years. The table on the screen shows the number of freehold transactions as a percentage of all transactions for each submarket. When looked at over a 5-year period, Wychavon has the joint lowest number of freehold sales alongside Worcester, with Worcester not necessarily being a surprise due to the institutional fund ownership of office space in the city. This stat becomes even more concerning when the freehold transactions over the past 5 years are broken down into the relative size categories. There have been no recorded freehold transactions in the sub 1,500 square foot market since 2015. This therefore makes it hard for the strong SME business base to find somewhere to buy and leaves no other options but to rent. The result of the restricted nature of the sub 1,500 square foot freehold market can be seen out of the window behind you if you turn your heads 180 degrees. Or for those with a stiff neck, I'll put the images on the screen. This is Barnes Business Centre, and in 2021 there were free lettings under 1,000 square feet, which are all completed by companies who place a high value on being located next to Junction 6. Wychavon is fortunate in having good infrastructure links, and all of these provide opportunities to present well-connected space, be it around rail links such as Worcestershire Parkway, motorway junctions, of which Wychavon has 4, by the ways of junctions 5, 6, 7 and 8 of the M5, and the well-connected A roads such as the A44, A46 and 449, all of which provide communications within the county and onward to the likes of Tewkesbury, Cheltenham, Gloucester and Oxford. However, while developments around these transport links are being considered, they must also provide opportunities to present freehold space for that SME market. Malvern. There was a low level of take-up in 2021 within the Malvern office market, as shown by the take-up chart on the left. However, this does reflect the small submarket size that we're seeing in Malvern. There is, however, a great pipeline of transactional activity, and there's currently 12,000 square foot under offer at Enigma Commercial Centre. So we'll already see what this will do for next year's figures. And again, it just says what we said at the beginning, these small markets are so volatile to large transactions. With regards to Redditch, on the left up is the take-up chart, which shows consistency in the take-up of office space in comparison to 2019 and 2020. With occupiers valuing being close to Birmingham city centre and the M42. These locational benefits mean that there is demand from businesses looking to relocate out of Birmingham, which explains perhaps why Redditch has the largest average deal size within the county. However, despite large regional and national businesses taking space in Redditch, the pie chart on the right shows a breakdown of the number of transactions by size. It's good to see a strong number of transactions catering for SMEs, as shown in the red by the 0 to 1,500 square foot category, and a proportionate breakdown within the rest of the categories. Finally, the Wyre Forest. Vacancy rates within the Wyre Forest office market are at an all-time low, shown on the left. We will wait to see what impact this has on rental levels, as there can be a time lag between the two metrics. However, what we are expecting is, as this is reaching an all-time low, rents to increase in 2022, perhaps presenting a great opportunity for office owners in the Wyre Forest or those looking to bring forward space there. So, like the office sector, industrial take-up has also increased from 2020 to 2021. With the 1,734,000 square foot that transacted last year being the highest amount of industrial space ever transacted within a year in Worcestershire. This is testimony to the great work done by local authorities, the Worcestershire LEP and developers to bring forward quality industrial schemes across all parts of the county and within all size brackets. So again, we'll look at the different submarkets, and starting with Wyre Forest. Take-up tracked roughly in line with the years either side of 2019, with 2019 being distorted by the sale of Zortec. The number of transactions in 2021 was also in line with the 10-year average at 18, the 10-year average being 19.4. The chart on the right shows the proportionate split across the different sizing bands, which again is encouraging for these small and medium businesses looking to be located in the Wyre Forest. What has been encouraging to see is the amount of freehold space that transacted in 2021. The submarket had the highest ratio of freehold to leasehold transactions out of any submarket, at 39 to 61. To put this performance into context, the second highest is Bromsgrove at 15 to 85. Examples of schemes where multiple units sold in 2021 are Ratio Park in the bottom left and Bewdley Business Park out at Longbank. As retained agents on Bewdley Business Park, we have seen overwhelming demand for these units, and capital values now being in excess of £125 per square foot, which just shows the price that these SMEs are willing to pay for a quality product in the right size bracket. So after Bromsgrove, the Wyre Forest has the greatest combined headline and average rental growth out of any submarkets. We expect the headline rent, which is the black line on the chart on the left, to increase further as we're now achieving rents in excess of £7.50 per square foot on the recently built Forest Industrial Park in the bottom right. This not only shows the demand for quality space, but also secondary space, as these average rents are increasing as well. And average rental growth in the Wyre Forest was actually the highest in the county. So we've just heard about the strong rental performance and strong capital performance. And what this should do is justify opportunities to refurbish brownfield sites to provide commercial space. The Wyre Forest has a fantastic manufacturing past, and there are a number of sites around. It could be possible that a commercial use on the likes of these sites could be more viable than a residential one. So on to the Malvern Hills. In 2021, take-up was triple the 10-year average at over 80,000 square feet. This was aided by transactions such as the letting of 38,000 square feet at Defford Mill in Earl's Croom to Aston's Coaches. Other notable transactions include the letting of 4 units at Mill Lane in Erdeston out near Tenbury Wells, which contributed 16,000 square feet of take-up within the region. Transactions such as these have such a positive impact given the total stock size of the industrial market in the Malvern Hills. This diagram on the left, each building represents 1 million square feet of stock. So you can see 14 million in Wychavon, 9 in Redditch, and only 2 million in the Malvern Hills. So it just shows how we need more space in the Malvern Hills and how this can make large transactions have such an impact on these take-up figures. What is great to see is there is a strong supply pipeline to increase these stock levels, with the current supply pipeline being at 50 months' worth of square feet in comparison to the 5-year average take-up. This figure is buoyed by Broomhall Business Centre, which does form the boundary of Malvern Hills and Worcester, and if you do take this away, supply levels do fall dramatically to 15 months, just showing how we need more quality space in the Malvern Hills. Finally, rents are increasing for both prime and secondary accommodation, and this, alongside the limited supply and small market size, must present massive opportunities for commercial developers. These opportunities will only become more apparent as improvements to the Southern Link Road reach their conclusion, making the Malvern Hills as accessible as it's ever been to the M5. So with take-up levels in 2020 being buoyed by the 350,000 square foot letting to Amazon at Redditch Gateway, 2021 levels return to a level that is closer to the 10-year average, albeit higher than 2017 to 2019. This is owing to the good work done within Redditch to bring forward new developments across all size brackets. Such developments include Velocity 42, which is the image at the top, which provides new space for the mid-box market, and Crescent Trade Park, which provided space for the SME market. We have acquired a unit on Velocity 42, and these schemes are now reaching completion and full occupancy, which is in turn leading to a fall in the vacancy rates as shown on the left. Redditch needs to therefore maintain the supply of pipeline of quality industrial schemes, as the demand is certainly there. Wychavon's industrial market excelled in 2021, with the highest take-up by square feet and number of transactions. This will be partly due to its large geographical size, but also due to the delivery of game-changer sites such as nearby Worcester 6. These sites do have an effect on take-up. So, for example, last year, where we were waiting for the delivery of some of these assets on Worcester 6, it did have a dip in the 2020 figures. What is, however, great to see, and you can see this in the chart on the right, is the distribution of transactions by deal size. There are a good number of sub 2,500 square feet transactions, and again, looking at the yellow to blue categories, a proportionate amount of transactions within other categories. So take-up on these schemes has led to a fall in the vacancy rate, as you can see top right. However, we expect this to come back up slightly as the new phases on Worcester 6, Vale Park in Evesham and Harsby Trading Estate come forward. Whilst it is great news to hear about the delivery of these game-changer schemes, we must also acknowledge the success of smaller developments and how these are still needed both in Wychavon and across Worcestershire as a whole. These developments offered space into the sub 5,000 square foot market, with most of Withywell's being below 1,000 square feet. Demand for this type of space is shown by Withywell's, where headline rents of £10 per square foot plus were achieved. So within Worcester, similar to the impact that the aforementioned Amazon transaction had on take-up levels in Redditch in 2020, the take-up levels for Worcester in 2021 were inflated by Arrow XL taking occupation of their 258,000 square foot unit on Blackpool East, and also the fantastic letting of 115,000 square feet at Sixways Park to Super Smart Service. Whilst these transactions are great, in 2021 we saw the lowest number of sub 5,000 square foot transactions in Worcester since 2012, with this market perhaps not being catered for as well. Whilst it may be more commercially viable to deliver larger unit schemes around the motorway junctions, we appreciate this aids haulage and logistics, there may well be opportunities for these SME occupiers who are perhaps less reliant on these road communications to the east of the city. We've already just talked about the Malvern Hills district and how the improvements to the Southern Link Road will release this area. There could be a massive opportunity to the east of the city as it's improved for SMEs. So Bromsgrove. Bromsgrove has the highest average rental growth and the highest capital values in the county, demonstrating a demand from SME businesses looking to exploit Bromsgrove's road communications. Since 2018, headline rents have increased by 32%, with capital values going from when I joined the business at £118 per square foot in 2018 to over £150 per square foot in 2021, an increase of 27%. For property owners within Bromsgrove, we feel that there is no better time than now to sell or let their industrial accommodation, as it's unclear how sustainable these figures are going to be. So, following the findings of this year's report, what are the top 5 takeaways? Firstly, it is evident from the data that confidence has returned to all sectors following the COVID pandemic. This includes office take-up, which is back to 2018 levels. However, rental levels for the office market have stabilised. This is possibly more due to a lack of quality accommodation than it is the impacts of the pandemic, with very little new office schemes having come forward within that time. 2021, as mentioned, saw the highest yearly industrial take-ups by square foot ever. And again, this is good testament to the work put in by all, particularly the LEP, to ensure that these new schemes are being delivered. A metric we used in the pandemic was the average deal size, and we're assessing whether companies were downsizing. It was reported in the press, office occupiers don't need office space, they're going to be downsizing. Any suggestions that this is the case have slowed, as average deal sizes remain stable across both markets. And finally, the lack of freehold opportunities has led to high capital growth in all sectors and submarkets. We're about to hear from Andy how purchasing commercial property is an attractive proposition for businesses and business owners. However, opportunities remain scarce. This trend will continue in 2022 and will possibly give high capital values and the speed of transactions, the best selling conditions that we can remember. So hopefully that has provided a brief insight into the performance and opportunities within the Worcestershire commercial property market. We'll be able to find more viewpoints and data within the report itself. Please do share this report with colleagues and clients. You'll be able to find an electronic copy on our website. Again, there's copies on your seats and more copies at the back of the room, and we've got copies coming out of our ears if you need any. At GJS Dillon, we have access to this data going back for over 10 years, and we are currently active in all 6 Worcestershire districts. So please do come speak to us today or any other time should you want any further insights into the Worcestershire commercial property market. That is all from me, and thank you very much for listening. I think now John and I will take your questions on the Worcestershire commercial property market. Thank you.
So good morning. I sort of stand here after watching that thinking, can you find a property to purchase in your SIP? So we'll talk about some other options for you in a minute. But so good morning, everyone. I'm Andy Gillett. I'm a director and chartered financial planner at BRI Wealth Management. We're a wealth management firm that offer both discretionary investment management and financial planning services to individual clients, business owners, trusts and charities. We're actually based in Meriden in Warwickshire, but many of you will know that some of myself and colleagues, 2 of them are here today, Vince and Ben, have lived and worked in Worcestershire for all our careers, and we have a substantial base of clients locally. In fact, it's nice to see so many familiar faces here today. I'm quite surprised to see so many of them. John and his team have asked me to come along today to talk through pensions, and in particular holding commercial property within a pension wrapper. I'm only going to have time to give a sort of high-level overview of this, but we are going to be taking questions afterwards, and I will be staying around afterwards if anybody has sort of questions about their specific personal circumstances. Likewise, my details are in the report as well, so feel free to get in touch. I have to tell you all that I am not a property expert, nor do I purport to be. So our role in these transactions is limited to advising on the pension structure itself, and whether that may suit your requirements and your goals, and if it's suitable for you. As such, I cannot advise on any particular property, and if it's a suitable investment opportunity for you. And you should ask people like John and his team for a view on that. So, before I move on to property and pensions, I want to talk a little bit about pensions just as a tax wrapper. So, why consider a pension at all, but actually, let alone putting a commercial property on it? Well, firstly, any property purchase in a pension will benefit from some tax relief. When you make a personal contribution, these are either funds coming out of your own bank account or through your net pay going into a pension, you get income tax relief at your highest marginal rate. That might be 20%, 40%, or even 60% for those who earn between £100 and just over £125,000. And this basic rate relief of the 20% is given within your pension, and your pension provider claims that back, and the rest of the relief is claimed through your self-assessment tax return. If your company or yourself or your own company makes a contribution, this also gets tax relief. The contribution paid is deductible against corporation tax, and there's no employer or employee national insurance payable. Unlike personal contributions, though, they don't need to be justified by something called net relevant earnings. The contribution is justified as part of the employee's or the owner's overall remuneration. And that's quite an important point. That contribution should be wholly and exclusively for the purpose of the trade, just like other expenses, so you get the corporation tax relief. And if you own your own business, essentially, and you're making personal contributions, please stop and make them through your own company. They're much more efficient. The funds in pensions, and in particular in relation to property, grow tax-free. So if we're looking at property, the capital growth is tax-free, and so is the rental income as it comes into the pension. It's also possible to VAT register your pension scheme, so you can reclaim VAT if required on purchases and also other services that might be required within that pension scheme. Pensions also offer a very tax-efficient exit. You can currently access your pension benefits from age 55, although this is set to rise to 57 in 2028. And will then continue to rise. So again, if you're coming up to that period of time thinking of taking pension benefits, just be mindful of that. It will go from 55 to overnight in April 2028 to 57, so you could get caught out if that's part of your plans, and then it will rise to 58, 10 years behind the state retirement age in 2034. So just be mindful of those key dates. You can take 25% of the value of your pension fund tax-free. And the rest comes as taxable income. In retirement, though, there's no need to sell the property. So very often in the past, when people were annuitising and so on, they would have to sell a property to buy an income in. Now the income can run straight through the pension scheme in retirement. There can be some issues around providing tax-free cash. So if you wanted to take your lump sum, obviously a property is an illiquid asset, so we do need to think and plan for that in advance, but nothing that can't be solved. As I say, anything else drawn from the pension will be a taxable income. But you're no worse off than if you held that property in your own name, for example. You're not paying any more tax in that respect. It's also interesting when you think about people's tax rates. So by way of example, I'll make a presumption that many of you are higher rate taxpayers in the room. Out of every 7 higher rate taxpayers, only 1 will remain a higher rate taxpayer in retirement. So essentially, when you're making contributions or putting money into pensions, you're actually likely to be withdrawing it at a basic rate at a later point down the line. And if you're a basic rate taxpayer, when you take your money out of a pension, essentially you're paying 15% tax. So if you've got £1 and you get 25% of it tax-free, you've got 75p taxed to 20%, i.e. 15p. So you're only paying 15%, which is much, much more competitive than income tax rates that you're probably paying now, or indeed, if you look at corporation tax rates, particularly with the rises in April, far more competitive for getting your money out of businesses. One of the things I'm always asked about is what happens if I die. So I'm just going to dispel a few myths if I can. The good news is that nothing is lost. Many people still think that the pension dies with them. It's just simply not true. There can be cases of that with particularly defined benefit schemes, final salary schemes. But really what we're talking about here is the personal pension world. So if you have a personal pension or a SIP or a SAS in the defined contribution side of things, none of your pension is lost. Age 75 is an absolute key date under pensions legislation. If you die before age 75, then there's no income tax payable at all by your beneficiaries. If you die after age 75, the benefits are subject to income tax at your beneficiary's highest marginal rate. But this is broadly the same as what you'd be paying anyway if you were withdrawing the money out of your pension. So you're no really worse off, especially if you've withdrawn your tax-free cash. At no point, and this is quite a crucial point, is your pension subject to inheritance tax. So I now have many clients that use their pensions really as a store of cash to pass on those assets, which include properties, to their loved ones or beneficiaries. But it's also important to note that those beneficiaries don't need to be connected to you. They could be complete, not strangers, but they don't need to be connected, they don't need to be dependent, they don't need to be family members. They can be anyone you choose. When the pension benefits are inherited, it's usually best to put them in something called beneficiaries drawdown, as this does not restrict the access of the beneficiaries to those properties, and also they will continue to grow tax-free in those pension wrappers, and the income will continue to be received tax-free. So broadly, if you die before 75 and leave a property in a pension to your loved ones, not only does it grow tax-free, they can keep it in the pension, but they receive all the income tax-free for the rest of their lives. And they can sell the property at any point and have all of the capital tax-free whenever they should choose. So it's highly efficient for death. The other reason we put it into a beneficiary's drawdown is if you die after age 75 and it is subject to income tax on the beneficiary's rate, then by having it in the pension, you can control the income tax as the money comes back out. So if you imagine you had £500,000 in your pension in a property, for example, even if it was liquidated or not, you die, and that's subject to your beneficiary's highest marginal rate. When it comes out, you're going to have an awfully large tax bill in 1 year. If it goes into a pension for them, they can keep it in there, it keeps growing tax-free, and they might want to then draw, say, £30,000 a year out of that, rather than taking the full hit on the tax. It's also worth noting that inherited pensions don't count towards the recipient's lifetime pensions allowance. So the lifetime allowance is broadly, we all have an allowance that we can build up in pensions before we start to pay other tax charges. And currently that's £1,073,100. That's actually been frozen, as with many of the allowances, till 2026 under the last sort of budget reforms. So overall, on death, it's extremely efficient, and arguably more efficient if you die than when you're alive. So let's move on to see how property purchase can be funded within pensions. So you can make personal contributions. These are, as I say, ones out of your own bank account or out of your net earnings. And we all have an annual allowance of £40,000 per annum that we can put into a pension. And we can also carry forward the last 3 years of any unused allowance. But note, you have to have a pension in place to be able to carry forward those 3 years. If you don't have one already, then you can't carry them forward. That could just be an old pension where you're a member of a defined benefit scheme, a final salary scheme, or indeed a personal pension. So in theory, you could contribute up to £160,000 in this tax year. And if you're a couple, for example, you might want to put £320,000 in to give yourself a good start to funding that. One of the things you do need to note, though, is if you're making personal contributions, you need to have something called net relevant earnings in the year you're making that contribution to get the tax relief. Now, you can still make the contribution, but you won't get the tax relief. So it's important, obviously, from a planning perspective, that we have a think about that. As I've said, if you're making a company contribution, it's part of remuneration, and you don't need to have these net relevant earnings because it's part of your overall earnings, and you're justifying that in that way. And it is, as I say, the most efficient way to extract funds out of your company. And this is only going to get more efficient as we see the rises on dividend taxes and corporation tax in April. You should also note that the annual allowance reduces if you have something called, and again I won't get into too much detail, but adjusted income over 240,000. Broadly, adjusted income is all of your income from whatever sources, plus, very importantly, company pension contributions. So you can have a situation where you make a large pension contribution and you actually reduce your allowances. So you need to be careful. So by way of example, what happens is if your earnings are over 240,000, your allowances come down for every £2 over 240,000 by £1. And that means, that you get restricted down to a de minimis limit of about 4,000 to put into pensions. So this means you have to plan in advance. You might want to get a lot into your pension, but if you were to put if you're earning £100,000 a year, and then you put 160,000 in this year as a company contribution, you're going to exceed those allowances and reduce what you can actually put in. So you're going to get a tax charge on that. You may prefer to do 80,000 over 3 years and stay under the limits. So just be mindful of that. So moving on a little, how can we look at actually funding a property purchase in a pension? So many of you, and many of us do have funds already in a pension or in multiple pensions. So these could be either defined contribution schemes, SIPs, personal pensions from old employments, nest pensions, etc. Or you might have defined benefit schemes, final salary schemes. Both of these types of schemes, all of these schemes, can be transferred, subject to suitability, I have to add, into either a self-invested personal pension, a SIP, or a small self-administered scheme, a SAS. I know we band around, so I use the longer versions. We often band around these acronyms. These are the two types of pensions in the UK that you can buy commercial property in. You could also group together with others. It's something I see more and more of, actually, buying together within a group of SIPs. You usually have to have the SIPs with the same provider. It's not always the case, and there are some exceptions to that, but generally speaking. And this can give you much greater purchasing power. So, you know, if we all took all our pensions, we could probably go and buy one of those much larger industrial units. So, and you don't need to be connected in any way if it's doing it through SIPs. You could just be a group of friends that know each other in the pub. You don't need to all work for the same firm. Now, if you do work, or you're all employees or directors of a firm, you may wish to consider a SAS, a small self-administered scheme. Or you might be a family business, and we often use SASs within family businesses because they help with succession. And we can build up funds and then swap the property within a SAS to the younger generations as time goes on. And a SAS works much more in a pooled way. So rather than it being, say, five SIPs that are all individual personal pensions, a SAS is a group scheme. So you all you co-invest together with a pooled arrangement, and that can offer some advantages. It's also possible to borrow within your pension scheme. So we're often leveraging pension schemes through borrowing. By way of example, if you have £400,000 in your pension scheme, or a group of pension schemes indeed, so if there were 3 or 4 of you together, you could go out and borrow circa 200,000. I know many people in the room could arrange that for you, so towards the purchase. Generally on a secured basis, and the rent is essentially used to fund the debt and service the debt. It should also be remembered, though, that this is a ring-fenced debt. It's not a personal debt, it's a pension scheme debt, and a pension scheme is a separate legal entity. So it's not personal, it's not a corporate debt either, so it's completely separate from your other affairs. So there are many ways that we can fund and purchase things flexibly. Looking at other flexibilities on who or what you can buy a property from. So this could be an unconnected third party, in essence, in the open market, and this is probably the most common way we come across things. If this is the case and it's an arm's length transaction, then the commercial price is used for the valuation in the pension scheme. It's agreeable between the seller and the purchaser. But you could also buy property from yourself personally, or indeed from your own company. And if it is a connected transaction, then you do need a third-party RICS valuation for the pension provider, which again, obviously John and the team can provide. And this can be a really useful strategy, particularly as John's just told me there aren't any in the open market, so you might as well buy them all off yourself. So, and it can be very useful if you're looking to essentially swap cash flow around. So you might want to remove from your company the property off the balance sheet and replace it with cash, which you can do, essentially selling the property out of the business to your own pension scheme and giving the money back. Or it might be that you want to pay down some borrowings, either personally, if you hold the property personally, or indeed in the corporate. So we've done quite a lot of this sort of work actually more recently, as when there's been cash flow pressures around things with COVID and so on. By swapping things around, we can alleviate that cash flow pressure and also reduce your borrowings, which can be a nice thing to do if you're under a bit of pressure. It should also be noted that some providers will allow partial ownership. So again, you don't necessarily need to buy all of the property. You might buy half of the property or a quarter of it, and then and own that between your SIP, for example, and yourself or your company. Or it might be that you buy a percentage of a property off a third party, so you own it with a third party as well. You can also buy things in tranches. So again, there's quite a neat way you could make a contribution from your company, essentially then buy a proportion of your your property that the company owns and give the money back to your company. So you can run a sort of circular arrangement, which is very tax efficient, and as time goes on, you're moving more and more of the property into that tax efficient world. Again, obviously, it'd be subject to ongoing conveyance and so on, so you need to be thinking about that. So there is a lot of flexibility in the overall rules. The difficulty that many of us find, including myself with providers, is that providers basically take a view on what they'll allow. They want to fit you in a box to make things efficient. So what I'm talking about is the overall general rules. You might phone up your provider and say, oh, I'd like to do this. They're going to tell you no. That doesn't mean it cannot be done. So let's have a quick look at some of the properties that we could put in there. So, you know, most commonly are fairly standard commercial properties, such as industrial units, shops, offices, warehousing, etc. And as we've heard, you know, many of these sectors are in extremely high demand. But it is also possible to put other things in the pension. And some with an element of residential, a residential element to them, such as hotels, care homes, public houses. Now, residential property is generally not allowed. I'll talk a little more about that in just a second, but generally not allowed in a pension scheme. So if you're buying one of those sorts of assets, I don't know, a public house, for example, care needs to be taken. You have to be a little bit careful about your own use of that pub, for example, because you would be breaking the rules. Effectively, you're benefiting from your own pension asset. And if somebody is living there, perhaps, you know, if we take a pub as an example, they're living in an apartment or flat above, then it should be part of their work. It's part of their accommodation provided for their work. But we look at these types of assets. In fact, many of my clients hold hotels in pension schemes. You can also buy agricultural land or forestry. This could be from yourself, or it could be from a third party. And again, if you're looking to release funds, you know, from land assets that you already have, that can be a viable option. In essence, it has to be commercial for the pension fund. So a rent needs to be paid. If you're buying it from yourself, you can't just buy it, put it in your pension fund, and then sit there and enjoy the use of it without paying a rent back to your pension fund. There are also other general rules that you'd need to follow, such as with agricultural land, it can't be landlocked and it needs road frontage and so on and so forth. You know, it'd be a bit of a crazy asset for someone to buy, bearing in mind the pension fund's a separate legal entity, a piece of land that they couldn't access. You can also buy land that has hope value. And again, many of my clients do this. And that could be agricultural land that you think you might get residential planning on, for example, in the future, or commercial. And if you do, and the value rises significantly, excuse me, this growth would be tax-free. So putting the land in at an early stage, if you think that there's possibilities of this, or indeed purchasing the land in at an early stage, is a very good idea. Now, although you can't hold residential property in a pension fund, you can apply for planning permission and you can start to build out actually quite a large proportion of your residentials. Essentially, the tax rule says that it can't become habitable. And again, I'm not a property expert, but broadly, you can't have bathrooms, kitchens, etc. in there. But you can build them up to a certain level. Now again, it's a specialist area and not all providers will allow it. So if you're unsure on that, ask me, ask your provider or your other advisor. It's also technically possible to hold overseas properties. But to be frank with you, it's very complicated. Many providers will now no longer allow it, and many advisors don't want to get involved in it. And the reason for that is that the regulator, the FCA, we've had a number of scandals in this area, which has caused us all a number of problems. Again, we haven't been linked to any of those, but from a regulatory perspective, it's fairly frowned upon. There are all sorts of types of commercial property that you can consider. So as you'll see at the end, I've put a few sort of other types that you can get in there. So broadly, most genuine commercial property transactions that will provide the prospect for growth, capital growth, and a regular income stream are allowable. Really, much of it depends on the provider, but we put all sorts of stuff into pension schemes, and if you had enough money, you could buy the stadium and put it in a pension scheme, for example. So you can look at various other assets as well. So, in summary, funding your pension is very tax efficient, and you get tax relief on your pension buying a property. Why wouldn't you think about that? The growth of the property or income produced from it are tax-free within the pension. The funds within the pension are inherited without any inheritance tax, and nothing is lost on death. Your beneficiaries may actually be better off if you die before the age of 75 especially. You can use the pension as a tool. One of the conversations I have with lots of people is they feel disconnected with their pension planning. So they put their money in, it goes into a fund, they really don't understand what they're doing with the fund. Someone like myself comes along and tells them it's all great, but they don't really feel connected to it. So it's a great way of actually connecting your pension with yourself, if you like. Or you might just want to get a deal done, a property deal done. You might be raising money somewhere and you might need to have another couple of $100,000 and you've got it in a pension fund, so you co-purchase, for example. So getting the deal done, or indeed helping with personal or company cash flow, or reducing borrowing elsewhere. There is a huge wide range of properties that can be purchased in a pension, not just the obvious and common ones, but you know, all sorts of different things. And if in doubt, just ask the questions. And much of this is dependent on what your individual provider will do. So the rules allow quite a lot of flexibility, but the providers like to shut down what they'll do because then they fit you in a box and it makes them more efficient. But broadly, there are providers out there that if it is in the rules, they will do it. And the last point I suppose to make is that when you're buying a commercial property in a pension, ensure you've got a good team of people around you. So I know there's some commercial property solicitors in the room. Make sure you've got a good solicitor who's used to conveyancing in a pension. There are some slight oddities. Make sure you've got someone like myself, not necessarily myself, but a financial planner that knows this marketplace and knows what they're doing. And also make sure you've got a suitable property professional that's advising around the property and the merits of that particular property. So overall, again, you can think of a pension as the most tax-efficient family trust available to hold property or land within. Much more efficient than what you can set up elsewhere. So finally, as you would expect, nothing in this world comes without a bit of risk. And so I need to point you to a couple of pages of risk warnings. I'm not going to leave them up there for very long, but excellent. So thank you for your time today. I hope it's given you a broad overview of the subject. I am around for questions, happy to take some now, or if you want to ask me something specific to your personal circumstance, please ask us afterwards. Thank you for your time. Sit down,